Hey everybody, it's Mark Agee. Welcome to another weekly stock market update. Glad you're here. Tough week, historic week actually. We've had a couple of gigantic moves in the market based on the thing I talked to you about last week, the Japan yen issues and the market going on over there, creating some inflationary fears around if the Fed's going to lower, and also talking about a recessionary fear. Everybody's thinking, well, we had a jobs number that wasn't so good, and then the Fed went into this the discussion about the Fed going into this non-lowering kind of thing. And now we're talking about emergency lowering. It's just been crazy. And I'll talk to you about that in a second here, because we just got off a great call with my mastermind group, and I want to show you what we talked about. So let's take a quick look, and we will do that. So get into, all right. So you could see we got 4 red lights, and when we got 4 red lights, that means you don't go, right? If you got 4 red light traffic lights, you're sitting at the stoplight. That's the way you should be. We've got we're the second day of a red market. It could start to change here by next week, but I think we're making weak moves off the bottom, which means there might be some lower, at least there might not be a lot of upper going on. You can look at this chart. This is the NASDAQ. You can see a couple of gaps in the last couple of weeks. 3 gaps I see on the chart. And those, there's going to be a lot of work that needs to be done to fill those gaps. So it's coming perfectly off the 200-day moving average from the early part of the week. And the S&P 500 looks the same, although it's not bouncing off the 200-day moving average. Will it go lower and maybe test it again? There's a good chance. But hopefully the good news is that the Dow is trying to stay above the 50. That might pull everything else up, and so is the New York. So if we get those 2 things that are looking strong, pulling everything else up, we might just be able to save a protracted red market. That being said, I'm not Nostradamus, and neither are you, so we have to play the market like it's statistically laid out there. And when it's red, that means there's not a lot of opportunities. I'm not seeing a lot of setups right now. I'm just seeing a few, and you need the market to help you on some of those setups. And then when those setups are ready to go, then you've got some tailwind but you need the market. Right. The volatility index, if you look, had one of the biggest days, probably the biggest day in history, where it moved from the low 20s to the high 60s in one day. So it went huge volatility up. We had a NASDAQ move of down 1,000, which was the biggest move it's ever had. So we've had some historic stuff that happened this week, and the volatility shows that. The treasuries were a big part of that. So you could see yields coming down as treasuries went up, and they spiked from 91 to 100. That's a 10% move in about a week, 2 weeks, something like that. That's a gigantic move. That spooks the market, okay? And that's the flight to quality from people selling off their yens to their yen and their Japanese bonds, I should say, to buy treasuries. But you can see that based on the chart, it didn't really last that long. We'll see what happens with that. Apple had numbers and gap down below the 50-day moving average. It's come back above the 50-day moving average, and looks like it wants to fill that gap that was created there. So we'll see. We'll see if Apple has some strength. I don't see a lot of problems with Apple, because it's got the show coming up where they release their new stuff, their new phones and all that kind of thing next month. So Apple usually runs up into that show, all things being equal. Nvidia is actually in a downtrend, a short-term downtrend in a long-term uptrend. So it's a little trend within a big trend. It's come back and it filled that gap from 93 on Monday, and now it's bouncing back up, but it's not above the 50. It's not in a healthy spot. Although I like Nvidia, it's not, to me, a healthy buy at this point. You'd like to see a little more volume. Eli Lilly had numbers, and you could see from that beautiful bar there on the right, it is right off exactly the 200-day moving average, which just freaks me out every time. And it looks to me like this stock wants to go higher. And this is what I call a chugger. It just kind of chugs along its 50-day moving average. Every once in a while, it goes through and tests it, the 200-day. But boy, this is a good-looking chart. Tesla, not quite as good looking. We got a gap there at 236 and a gap 206 that it needs to fill. It's coming down on low volume, which is hopeful for anybody that's in Tesla. And it's below the 200. That's a problem. It needs to have a week where it goes above the 200 and stays above the 200. and it hasn't done that in a little bit of in a few weeks, actually, where it's actually held a moving average that it's been hugging. It just kind of vacillates along its moving average up and down and up, over and under. JP Morgan Chase, because of the treasuries doing well, they have a lot of those on their balance sheet. JP Morgan Chase is doing fine as well. So if you own that one, that's great. I want to go to CrowdStrike. Now, this was one, remember, I keep talking about this because they had the big outage that took down the airlines and a bunch of banks. And, this company's in a lot of trouble, and it's down 50%. It hit almost $400. And then this week it hit $200. Like in 2 weeks, it went from 400 to 200. So if you're in that, that's a tough ride. And that's why you've got to cut your losses when you can in some of these names, because when they go down big. Now, you couldn't have anticipated a Saturday morning where that whole scenario happened. And CrowdStrike, ended up opening down, and it's been down consistently. Now it's bouncing up. It's a dead cat bounce because it's bouncing up on low volume. So I wouldn't be touching this thing unless we got another test of this hammer candle low, and we tested it on good volume and it bounced. So be careful trying to catch the falling knife on this. In fact, be careful this whole week, because we are still red, and I want you to live to fight another day and not get sucked into trying to find a bargain and stocks that are on sale. That's it for me. Have a fantastic weekend. Hopefully next week we get a better market, and I'll talk to you soon. Thanks for joining me. Take care. Bye.